Alrighty, guys, let us begin our easy algo training. This training is going to be super exciting because I'm going to show you guys some amazing things today. We're going to talk about all the advancements in the last week, the automation. I'm going to take you guys through a sneak peek of the new app as well. I've got it on my phone and I'm able to project my phone onto the computer screen so I can actually take you through it and show you exactly how it works. So excited. This has been a project that's taken a long time and there's been so much that's gone into it. And then I can make it available for you all. But let me start by just I want to go. I've had so many questions from people just asking me how all this automation and all the new things that we've implemented. So I'm just going to start from the beginning, showing exactly how the systems are working in the group, how people are using every step, from finding the actual trades, because one of the biggest challenges we had in the past was finding good trades, and people ended up getting so lost looking and not knowing how to find it. And we managed to solve that challenge by having this Trendex scanner, which pumps into the group the daily narrows, the weekly, the monthly, the combos, all of those that come in here really solve that issue. Because if you're new to trading and you're still not sure how to find good assets to trade, this is just amazing because it brings it to your radar very easily and you can kind of put it on your charts and that becomes what you trade. So I'm just going to go through like step by step how it would actually work. If you logged on here, if you saw maybe the new weekly just started, the new weekly pivots, how we would log in here, access the weekly pivots, put it on a chart, and how we could actually trade off of those pivots the whole week. So I'm just going to go through like every single step of the journey. And then I've got someone last week was talking about the VWAP. And I actually been working on a VWAP and I've actually finished it. You guys should actually have it all available. If you look in your invite only scripts, I added a new indicator in there. It's called the VWAP X. And it's basically a multi-time frame VWAP that coincides with the pivots. So there's three different VWAPs, there's three different colors, and the colors are for the daily, the weekly, and the monthly, the same as the pivots. And it's an extra tool I've been practicing, and I actually learned from someone in the group. He's been sharing it with me. We've been practicing a little bit. Okay, good. You got access. Fantastic. Awesome. Nope. Okay, wait. Check again, everyone. Check again. I will just start in the beginning, and then I'll start going through the VWAP X a little bit later. But it's a nice tool. You can start playing around with it in the meantime. And then, okay, cool. So I'm going to start from the beginning and how this all works. So we've added a whole lot of new features. The features that have come into the group in the last week or 2 weeks is, first of all, it's these automated bots alerts here. Basically, it's scanning the market and it's bringing to our attention all the daily narrow pivots, the weekly narrow pivots, the monthly, and then it's doing a combo of pivots. So as you know, the dailies are going to come every single day. It's going to update with all the new dailies. Once a week, it's going to do all the weekly new pivots. And it's going to scan the market for the most narrow pivots it can. Sometimes you'll get one or two that aren't that narrow, but because it's very difficult for the system to actually work, because some tokens have higher liquidity and some are like 0.0001, so it's hard to get them exact. And then we've got the monthly, and then we've got the combo pivots. And the combo pivots are basically the blue is going to be the dailies, the red's going to be the monthlies, and the yellow is the weeklies. So you can come through here and you can see, what combos have we got. And the combo ones are also very good because it's showing two of the pivots, especially here. Look at this, PAX G. It's got a daily, a weekly, and a monthly, all narrows. So if we can find multiple narrows, especially like the higher time frame narrows, like here, we've got a weekly narrow, a monthly narrow. This is showing that this could be a very trending coin at the moment. So we can come in here and then we can take these and we can plug them into our trading view. Someone in the group has actually created a really awesome system where he's built. I don't know if I can show you an example. Yeah, Sub-Zero. He's built this system. So what he does is he goes in and he takes all the details from all the daily, the weekly, the monthly, and he puts it in a framework where you can just copy it and import it directly into your trading view. So it makes it super easy for you to do that. I'm busy chatting to my coder to see if he can actually print this information in here for us. So it just gets so simple. You can just copy it, paste it in. I'm not sure if he can. He's still trying to figure it out and see if it is actually possible. So then once you've got this data, then you can take it and you can plug it into your trading view. So I'm just going to quickly change the screen share here. Once we've got the data from the Discord, we can plug it in here, and you'll see the new app is also it's gonna revolutionize things a little bit. Actually, I'll actually show you right now because it'll go nicely what I'm showing. Are you guys ready for this? I've been so excited to show you. This is the moment I've been waiting for. No, just looking black. I don't know why. Okay, let's
Are
try.
you using an emulator?
Yes. I've got a Huawei computer and a Huawei phone, so they just synchronize. So I've got it selected here. I don't know why it's not showing you. Like I can see on the screen, it just looks black.
It could also be maybe you've got resources using the RAM on your system. So maybe it might be best to close if you've got multiple tabs opened or you've got
Okay.
loads of applications running, just to
Okay.
minimize exposure.
Okay. I'm gonna close a bunch of things and let's see if it'll work. It's still black. It should work. I mean, it's not a big application. I really want to show you guys. See, it's showing the top and the bottom, but it's not actually showing the actual screen. I'm on it here. I really want to show you this. Yeah, I would have thought sharing my screen, because if I share my exactly what I see, no, it's just not working. Sorry, guys. This is a bit of a bummer.
Nah, don't worry, you show us next time.
Just want to get you guys so excited, but I mean, I'm gonna probably release it into the group tomorrow. So, cool, guys. You'll just have to wait until then. Otherwise, if you watch this video, you will see it because it's recording my screen. So you will see it if you watch the re-recording of this video, you will see it. Okay, cool. So let us go to the next part. I'm gonna go to the chart. So what we would do is once you get that information from the Discord group, you go in there. Let's say, so what I did last week, I'll give you an example. You know, it was the new monthly started. And when the new monthly starts, you've got a great opportunity to start looking for long-term trades. And this is one of the tokens I was looking at last week was rats. And there was a few guys, you know, like if you look, there was a few that were very narrow, but this one looked exceptionally narrow. Like, can you see it's so thin, this monthly over here, that it looks like one line. And for me, this is such a good sign because, you know, after backtesting these and experimenting with it for a very long time, whenever you've got a very thin pivot like this, it makes a big movement, and especially a monthly. So a monthly is basically representing our long-term trend. And if we've got an asset that gets on top of a monthly, we know that if it's going to move upwards, it's going to be a big move upwards. This is our opportunity to get into an amazing swing trade. I actually entered this trade on the grid here, like right near the grid, you know, like a lot of times if I see, you know, like last week was a very busy week for me, so I didn't actually even get to trade that much. So I just, you know, I just saw this on the grid and I just entered and I didn't even really check up on it that much. And then I looked today and I saw this thing was like pumping to the next level. And I looked at my P&L and I was like 700% up. And then I just thought, I really wanted to chat about this in the training today because it's so valid to see these levels, you know, and the system brings these to us, guys. It makes it so easy for us. You know, we can go in there every day. We can check out the monthlies, the weeklies, and then according to the monthlies and weeklies, we can trade according to those. So for instance, because this was a monthly, this red over here, I can turn on the weekly grids and then I can trade accordingly to that. So you can see, this is what I noticed over here. When it got to this point, I noticed that it was above the weekly grid and it was a tight weekly. Can you see? So this weekly was tight and then the monthly started here. So at this point, we were above a tight weekly and a tight monthly, which is really showing such strength. It's like we don't even need to look on any other time frame to understand this. Like, we know these pivots show us when there's strength in the market. It makes it so simple for us. Before I discovered this, understanding the movement of the market and the bias of the market was so much more challenging, because I'd go into higher time frames and there was so many other things, break-in structures. But this just simplified so much for me. Basically, if it's on top of the grid, if it's on top of a monthly and a weekly, we're bullish. We're very strongly bullish, because the weekly grid is midterm trend and the monthly is your long term. So if it's above a midterm and a long term, it's showing that it's going to be very bullish asset. And over here, you can see we've also got, we've got this whipsaw action over here. And this is actually the contraction phase. So when I started looking at this, I started getting this puzzle that was just unraveling in my mind. There's a contraction phase happening over here. And I'm just going to draw this manually so that it's easier to see. But if we had indicator X on it, would pretty much draw something similar to this. And this is my revelation that I want to share with you guys, because this was something that, this is a question I've been asked so many times, was how do you know when the trend phase is going to happen? Like those that understand the indicator X, I'll give a brief description. We've got the first phase, which is the contraction phase. And then afterwards, we've got the whipsaw phase, which is the expansion phase. So you can see we've got this whipsaw that's going to whipsaw around the value line. So we've got phase 1 over here. Phase 1, the contraction phase. This is letting us know price is going into contraction, and it's also an incoming volatility indicator. So it's going to let us know what is going to happen next. And what is going to happen next is phase 2, which is the expansion phase. We get the expansion phase happening. And then the biggest question that everyone asked me was, how do you know when the third phase is going to start? Because that was the biggest question, is when does this third phase start? And when I saw this, it really clicked for me, because this played out so perfectly. We get this first phase, we get the whipsaw, and then as price got onto this monthly grid, that's pretty much when the trend phase started. And there's a reason I called this trend X, this indicator. So it's like it gets onto the grid and then this massive trend actually starts happening. I'm still playing around with this concept, but for me, I'm starting to see this idea of as the whipsaw ends, and it ends on top of a pivot, especially a narrow pivot, because remember, narrow pivots represent a trending market. Wide pivots like over this represent a ranging market. So we know if price gets on top of a narrow pivot, it's going to be a trending market. And then if we're looking for the third phase, which is the trend phase, it only makes sense. It's going to start as it gets on top of these narrow pivots. So this was such a revelation for me, and this made so much sense. Like in this example here, you can see there was so many different ways we could have actually traded it. Even just above the weekly, if price is above a weekly, and you can see we've got the contraction box over here, it's above this weekly grid. That alone tells us that it's bullish. If it's above the weekly, it's bullish. If it's above the monthly, it's bullish. If it's above the daily, it's bullish as well. But in this example, you can see we get this whipsaw, and this is how we know it's a very good quality master pattern, is that straight out of contraction, we get these very strong whipsaws. I mean, this is evident. Look at that candle. That is a FOMO induced candle. This is to make everyone buy, and then it obviously turns against them. This one over here, this candle to make everyone buy. This is to make everyone sell. So these candles are clear that this is a manipulation phase, because the expansion phase is the manipulation phase. And this example just highlighted it. So this phase here was designed to just liquidate retailers and take money from the market, so that these market makers, the market makers, guys, they're the ones who are running the show. And they have this plan. They plan out this process. This is a process whereby they can harvest money from retailers, from the dumb money, people who don't know what's going on. This is where they fill their positions so that when they do get to this trend phase, that when price does go into a trend, suddenly they're going to start taking profits from all these positions that they got filled. Because, the market makers have issues. They can't enter a trade anywhere they want, anytime they want. They have to break down their positions into multiple entries, and these are how they do it, because the only place they can really enter is when the mass market makes a mistake. Whenever the mass market makes this mistake, and these are these candles, this is liquidity that's made available for them to fill their massive orders. So we've got these phases happening. It's so nice to be able to look at the chart and be able to interpret it and know exactly what is going on and know how to trade it accordingly. And sometimes you have to just play these scenarios over and over and over. You have to familiarize them over and over. And I still do it. I spend hours just back testing, looking at the charts, looking at patterns, just figuring out, looking for clues. It's like this formula that we're trying to figure out, like a lock picker trying to pick a lock. We're trying to decode the market. And these tools really make it easy for us to interpret this data so that we have a very good understanding of how to enter, what's going to happen. But this was the perfect example over here. And guys, if you get these, I've been testing this a lot, and if you get these contraction boxes above these tight pivots, we know that our best entries are going to be when price is underneath these value lines. We know that because we know that it's above the thin weekly pivot, which means it's bullish. And then we know that our best entry into a bullish territory, because we understand the market bias is bullish at this point. That is the first step. The first step is to identify the market bias. And TrendX makes it so easy. Before I always had two charts, and things evolved like quite rapidly in the last few weeks. Before I used two charts, and I'm just going to bring on Ratcha, and I would look at the Heiken Ashi, and it's still a fantastic thing to do. I would look here, and you could see this would have been my entry before, and this still works, guys. If this works for you, this is great. I would have waited until we got a big flat back candle like over there or over here, and that would have been my clue to enter this trade, is looking at a higher time frame. I might have even gone to like a 12-hour time frame or a 6-hour. Yeah, so you can see this would have been my entry. If we're using the Heiken Ashi, which is in the basic training, and it's still a fantastic model, it works great. This would have been my entry, because you can see price gets down onto this monthly grid, and then this is our first flat back candle showing this volume in the market. But we don't even have to do this. This is just one technique, and if it works for you, use it. I used to use this a lot, but since I started playing around more with these pivots, I realized that they're telling us the story already, and it doesn't even matter what time frame we're on, because these pivots stay exactly the same no matter what time frame you're on. That's what's so great about the pivots. You can be on a 5-minute, a 15-minute, a 2-hour, whatever, and they will stay in the exact same location. So immediately if the market's going to be bullish or not, just by noticing where the location of price is in comparison to these pivots. Because these pivots are showing us where price is within the monthly and the weekly. So we don't even have to check. This is the weekly middle of the pivot range, and this is the monthly. So we know that this region over here, if price is sustaining this region, it is showing us that price is more bullish. Otherwise, price would collapse below this level, and which would show it's more bearish. So when price is above a weekly pivot, that is showing our sentiment is bullish. If price is above a monthly pivot, that's showing our sentiment is bullish. So by knowing this, by understanding that these pivots are also giving us a clue into the sentiment of the market, it helps us understand where the direction is going, which helps us understand if we're going to use our sniper entries with indicator X. It makes it super easy. And now you don't even have to use indicator X with it, but it's a great combo. But I mean, you can just enter alone. when I entered this trade, I didn't even use indicator X. I just saw price was on top of the grid. I noticed price was on top of the monthly. I know price was above the weekly. And then I took my entry like pretty much around about here. And my stop loss was just under the grid. So I had a little bit of a bigger stop loss, but this was more of a swing for me because I had such a busy week. I didn't have time to monitor this trade too much. And then look, price came all the way up 30%. And I didn't even look at my chart. And then it came all the way back down to my entry, and then it shot up again. So for some people, they could have made 30%, taken profit. It would have come back down, and then they could have re-entered over here in this demand zone. I always talk about these demand zones because really it's like they work so well. Like you'll see price just tapped into this demand zone. And even though this is when the market was taking a little bit of a dump, when the market takes a dump, guys, it is pretty much a calculated dump. Oftentimes I study the charts and I see that the dump goes straight into the demand zone and then it shoots in the other direction. So it's like the market makers drive the price down to usually fill the imbalances, to fill the fair value gaps. They fetch the liquidity and then they shoot in the other direction. At the same time, all of those guys that are holding on to the trades too tightly, they liquidate them. Like a lot of people would have entered the trade. Like say, for instance, you entered here. Say you used Trend X and you used Indicator X and you used the TDIX. You would see this would have been our entry over here. We've got a shark fin and we've got another shark fin over here. So we had two perfect entries, perfect entries. And they're aligned with this because you can see they're underneath the value line and we get a shark fin. They're underneath the value line, we get a shark fin. And they're above the weekly pivot, which is showing bullish. So if we look at this, immediately we can see, we've got contraction box above the weekly pivot. It means it's bullish. So we're only looking for our longs underneath the value line. And then we come look at TDIX and we look for these shark fins. And then we get our precise entries over here. Look, these are very nice shark fins. Very nice. V, V. And then another thing to pay attention to is these Bollinger Bands, guys. They really help us understand when there's going to be volatility. So you can see, look how tight the band is getting over here. If you measure from here to here, look how tight it's getting. And you'll see over here it was much bigger. Can you see? And then it just got smaller and smaller. And now it got really tight. And then if we look at this place here, as it came onto the monthly grid, it started getting tight. Can you see that? So we know there's something building up. We know there's something building up. And if you backtest this, you're going to see this happens a lot. Some guys in the group were even talking about the other day. I was actually so happy to see that. So in our analysis, we can really understand what's going on. We can see here, we've got the contraction phase. We know we've got this expansion phase happening. We know the best place to enter the expansion phase is underneath the value lines. We know it's bullish because it's above the weekly pivot. We know we're looking for our entries at these shark fins because they're just helping us get these more precise reversal entries. There's so many clues being presented to us. It's like a language, and it's once you know how to interpret that language, you can read it clearly and you can know exactly what it's going to say. And then we've got this, and there's another confluence here. We've got a trend line forming as well. So we've got the trend line break, and all of this happens at this point over here. Suddenly over here, price is on top of this super thin monthly pivot. At the same time, we've got these volatility bands are tightening. They're getting ready to burst because that's what usually happens with volatility. It gets tighter and tighter, and you'll notice it, and then all of a sudden it bursts out, and you can see all of a sudden the size increases, and then it bursts, and then look, all of a sudden these legs start opening up. This Bollinger Band bottom starts getting wider. This top gets wider. When we get this opening up of the Bollinger Band, that is showing an increase in volatility. So first volatility decreases, which is this here. It's a decrease of volatility. And then there's an increase of volatility that occurs. And you'll notice if you go back, trace these bands, you'll see it happens all the time. So it's just another nice confluence to look out for, especially when it all ties in together, as the story. Then we get price getting on top of this monthly grid. All of a sudden, if we had gotten our entries here, these would have been the perfect waves to catch, to enter into this massive wave. I mean, there wouldn't have been a better entry than entering into these regions where we got shark fin. Okay, this one we didn't get really a good shark fin. So these would have been the areas. And we got this massive wick down here. Can you see we got this wick into the weekly pivot? So this is also showing us there's rejection into the weekly pivot. This wick alone could have given us such a good sign that price wants to go up because it's rejecting into the pivot. Price does not want to close, with an actual candle underneath here. Instead, we've got this big rejection wick. Whenever you get these rejection wicks to the downside like this, they can symbolize reversals are occurring. Price is rejecting the downside, does not want to go down. It wants to push up. And in combination with all these other little pieces of the puzzle, it can really paint a clear picture in your mind of what is going to happen. If you missed this entry, or if you were afraid to enter here, because a lot of people might have been afraid to enter here because it was a big dump, it happens quick, then this would have been the next best entry for us, guys. This one would have just been such an amazing entry. And then price, we would have gotten in here. Price got on top of the monthly grid. Then when the new month opened, we would have seen this, and this would have even made us more excited. When I saw this, this was an extra confidence that got me very confident, because I saw now, oh wow, all of a sudden the monthly grid, I mean, guys, I get excited when I see these narrow grids, because I've seen they make these explosive movements, and I've seen it happen over and over again. Sometimes it takes time, sometimes it happens very quickly. So for instance, this monthly grid opened up over here. It opened up on the 1st of March, and the explosion happened on, it opened on Friday the 1st, and then it took off on the same day. So this basically just took a matter of hours from 2 a.m. my country to 6 o'clock. So it basically took 2, 3, 4, 5, 6. Yeah, it took like 10 or 11 hours. And then this thing suddenly just decided to shoot off. And it made sense. It made total sense that the trend phase is going to happen on these trending pivots. These thin pivots are trending. They represent the trend occurring. And then what we got is this big movement over here, which it left displacement, guys. See, this is displacement. Whenever we get price move very fast, we call it displacement of price. It's moving fast. And if I go into a higher time frame, I'm going to show you, you'll see it a bit clearer. So let me go to a 4-hour. So you can see, look at these candles. Can you see we've got these massive candles? There's 1, 2, 3, these momentum candles just shoot up. Whenever we get these big candles shoot up, this is called displacement of price. And whenever we get displacement of price, it usually leaves behind an order block. And you can see we've got this demand zone order block over here. So this is how price naturally moves. It makes this massive move up like this, and then it retraces back to the demand zone. So if we'd known this, right, we wouldn't have, if I was watching, I wasn't even watching the screen at this time because I had such a busy week, but this is how price usually does move. If I play out the whole story now from the start, you can see we've got contraction, expansion, trend phase. When the trend phase starts, we've almost got this mass displacement of price. When we get displacement of price, it leaves behind an order block, which is over here, which is our demand zone. It shoots up, and you can see over here, this would have been our liquidity line. This would have been one of our major targets, areas we would have taken in this instance, because if we're looking at the master pattern, the indicator X primarily, we would have seen over here, expansion up, expansion down. And look at these wicks. Can you see here? We've got a very big wick to the upside here, and then we've got one to the downside. It's kind of like a Darth Vader wick, one shoots up, one shoots down. So it's clearing away. This is clear, showing you this manipulation, liquidating, filling their positions, and then suddenly monthly pivot opens. It's nice and thin. Trending phase begins, and then boom, it enters into the third phase of the market, which is the trending phase. If we had entered here, if I was actually watching, this should have been my actual target. It would have been this liquidity line or these liquidity lines, depending on how you like to trade. Sometimes it's better to target less than more because, as you've noticed, the price does not move in straight lines. Most of the time you'll go into profit and you'll lose all that profit if you don't take it off the table. But since this asset was moving so fast, we could have got our 14% very easily and probably our 22% very easily, just because of the fact that we're above the monthly pivot and it's super narrow, and we're above the weekly pivot and it's super narrow. Well, it's not as narrow, but I consider this super narrow, but this is just extraordinarily narrow. And then it shoots up. We would have taken our profit at this liquidity line. That would have been our profit. If we were combining the two together, we also could have added more details. Within Trendex, we could have looked at the resistance lines. And we can see, look at that. Look how perfect it ties in. So sometimes you'll notice multiple confluences. So you can see here, this liquidity line ties in perfectly with this previous month high and previous resistance one. So it's very evident at this point that we're going to get resistance on this chart. Super evident. I'm just going to go down to 1 hour. And we did. Price hit that chart, it bounced, hit that chart, and then we got this massive retracement down. So if we were looking at this, we could have seen that this would have been a very nice place to take profit. Or here would have been, 14%, guys. It's in a matter of a few hours. It's massive. Even 23%, it's massive. In the matter of a few hours. How long did this trade actually take if you've got it in over here? 7 o'clock to 8, 9, 10, 11, 12, 1, 2, 7 hour trade. This would have been a 7 hours for 23%. If that's 10x leverage, you've got 200% trade. That is life changing right there, like that one trade. But then you would have noticed that it's hitting this previous month high. And monthly high points are usually strong resistances. But look here, it broke through. It actually broke through, and in this scenario, the way we teach Trendex, this would have been another entry, actually. And we might have gotten stopped out of this if we didn't, act very fast. But that would have been our entry, and that still did another 8% before it rejected and dropped all the way down. So we still could have caught another entry. This is such a good place to also enter when we've got tight pivots. These areas, because you'll see here it didn't quite work out. But over here, it did. So we never quite know when it will or when it won't. But in this example, cool, you might have entered. The nice thing about these tight pivots is we have very tight stop losses. So if we had entered this, we might have had a 2% stop loss. If we didn't take profits, sometimes, guys, if you've got 8% on the table, sometimes it's good to just take it, regardless of whether it's going to go further or not. A lot of times, guys wanting price to go super high, they end up making nothing because they don't take their profit off the table. And it's important for you to recognize what percentage is enough for you per trade. I went through a phase where I was only looking for, between 2 to 5%, even 3%, where I would just take my 2 to 3% off the table and then wait for another trade. It sometimes can be much safer, especially if you're not a super skilled trader and maybe you don't understand the market flow that well, or understand, when the market's, because to anticipate this, you would have had some serious skills to know it's turning against you. You might have seen that over here, you would have seen that there was a big rejection candle. And probably if we turned on over here, over here, you would have seen all these divergences happening on TDIX. So you can see that it's actually losing steam at this point. This candle alone would have been a sure sign to exit on top of the divergence. If you see a divergence with a reversal candle like that, that could have been a sure sign to get out of this trade. It doesn't always happen that way though. So you never really know, or you just take the loss. Because guys, it's actually okay to take a loss. It's okay to lose. It's really, really okay, because you know what? If you lose small because you have a tight little stop loss. If you win big. And then one big win can equate to 10 losses, so then the next 10 losses you're covered, because it is a business, and, in every business, there is loss. If you're in a restaurant, there's stock that goes off, there's food that goes off, there's, the rats that eat food. It's like in every business, there's going to be losses, and this just so happens to be the losses in this business. If you had been aware that there was this demand zone here, And I always draw my demand zones, guys. Like if I see a big movement, I always draw it out, especially here. You can see, look at this candle. Like for me, this would have been such a strong demand zone. This could have been the next entry. If you saw price coming down, you would have waited for it to come into the demand zone or just be close to this monthly pivot. I mean, just price getting close to this pivot can serve as a re-entry, because oftentimes price will shoot up, come back to the pivot, then shoot up again. You'll see it like it dances off of the pivot. But then for more confirmation, we would have opened up our beautiful TDIX, and we can see over here we got this lovely shark fin, and we would have waited for price to come back into the band. So as price returns back into the band over here, this is the point where we can look to enter this, and especially over here, because we would have seen that at this point it's still bullish. Even though price is coming down, it is still bullish because we're above the weekly pivots and the monthly pivot. It is still bullish long-term and mid-term. So we're still looking for long entries at this. We're just waiting for the perfect place to enter long entries. I mean, we could have seen that this could have also been a demand zone, because we've got the same thing happening over here. It's the same story. We've got displacement of price happening, and it's leaving behind an indecision candle, and these indecision candles are our demand zones. So we had two places where price could have come back to. We could have kept these two on our radars, and then we could have just used the TDIX for more precision and understanding when it was going to happen. So you can see, as price came down into this demand zone, we didn't get confirmation over here. And I don't like to enter if price is hanging out. Like you can see, this is where this wide RSI comes out of the band. If it's hanging out of the band, we never know how far down it's going to go. So it's not a good idea to think it's a shark fin here, and just to enter. Our safer entry is when price comes, when this white RSI comes back into the band, because oftentimes, and I've actually got into trouble this way, I've front run my trade. I see price coming into the band, I see a V forming, and then I enter, but then it suddenly curls and keeps falling down. So we always want to wait, if we're going to use the TDI for confirmation, for it to come back into the band. And that would have been exactly at this point over here. See, so we wouldn't have gotten like the most precise entry if we want to work on confirmations. This point over here would have been the most confirmed place to enter our trade, if we're basing on confirmation. If you were just going to go off price action and you had experienced the price action, you could have set limit orders and entered as price came onto, as soon as it touched this demand zone or around this area, this would have been an entry for you. It all depends on your skill level and how some traders only trade on price action. They only trade, so they wouldn't use any of these indicators. They would maybe use TrendX, because TrendX is a price action tool, or they would just go off supply and demand zones as well. But you can see price hit this demand zone here and it burst straight through. And oftentimes you do see this with demand zones or supply zones, price goes straight through them. I've seen it happen many times before. So that's why it's so nice that we've got other tools to just, we want to make trading safe. You want to, your first prerogative, your first intention as a trader is not how to make money, it's how to preserve your money, how to be more careful with your money, how to be so excellent with your risk management. And the key to risk management all comes down to your safety, how safe you are in the trades. So a lot of the ways I teach in these trainings, sometimes I don't teach exactly some of the ways I would trade, because I might be a bit more risky in my trades, because I might have more experience in certain things. But the way I like to teach are the safest way to trade. Where, like for instance, sometimes price would be underneath the pivots. Like if you look here, this blue line over here is the bottom of the monthly range. And this is a place where reversals can actually occur. They can come down here, and then we can look for divergences, and reversals can happen here. And oftentimes price might even come lower down. Price might come all the way down here. When price comes down over here, how do we know when it's going to reverse? How do we know when there is a bottom? We can look at the TDIX, and we'll look for shark fins, or we'll look for divergences, but we never truly know. So many times I was always looking for bottoms, and sometimes it can do this, and then it can come further down, and it can take you out. So this is still a fantastic way to trading, but it does require a little bit more skill. But if we're sticking to just trading on top of the pivots, it is one of the safest ways that we can trade. And I really want to teach you guys how to trade safely, risk management. The only way to become a consistently profitable trader is through risk management. That is it. Through making sure that you enter your trades when there's safety. And sometimes it can be hard because, you see this big explosive move happen, your emotions kick in, and you just enter the trade without even thinking about it. I mean, how many times have you jumped into a trade without even analyzing the chart properly, or without even thinking about it too much, just simply because you saw a big candle and you got a feeling that the price was moving up? I've done it many times, and I'm sure you've all done it many times. It's how the market is designed. When you see a big candle, it creates FOMO. And it's so real, guys. The FOMO is so real. You get this emotional response, and I speak often about these emotional responses because all decisions in human psychology are made emotionally first. Every decision is made emotionally, every single decision. Every decision you make is emotionally, and then we justify it rationally afterwards. So all decisions are made emotionally. And in trading, if all of a sudden you get FOMO and you see this big candle and you suddenly get this good feeling, that, oh, I get this good feeling, this emotional response kicks in, it can cause you to just suddenly enter your trade. And then maybe you'll review the trade afterwards, and you'll realize, you'll be like, that was not a good idea. I don't know why I did it. But because your emotions are making decisions for you. And this is why, if you've ever read like some like good trading books, like Trading in the Zone and those kind of books, they go very deeply into trading psychology and emotional trading. And they talk a lot about being a neutral trader, trading without emotion. So if you make a big win, you're not getting too excited. If you make a big loss, you're not getting too upset. You're just a neutral trader. When you see big candles, you're not getting too excited. When you're seeing big drops, you're not getting too upset. You're just trading logically based on the confluences and the criteria. And this all comes down to being very disciplined as a trader. So we provide you with all the different steps to look for, to make sure you're entering at the right place, and, like for instance here, you're only entering your long position underneath the value line. You're only entering your longs when price is above the weekly or the monthly. These are certain criteria and disciplines that keep us in the right track, that keep us within our risk management so that we stay safe, so we can last longer within the markets. And it's real, guys. Emotional trading is such a thing. Like I'm going to talk about it a lot because I want you all, when you're trading, I want you so aware of your emotions that as a trader, you're noticing when your emotions are kicking in. So you're in a trade, and as you're in the trade, you're also noticing your physiology. This is so important. You're reflecting upon your own body, and you're starting to notice what emotions are you feeling. Because oftentimes you can feel adrenaline. Adrenaline is like, when I started trading, I used to start sweating every time because I'll get this adrenaline rush from trading. Especially if you enter into a high position, you can get an adrenaline rush. And adrenaline can actually cause you to make bad trading decisions. I actually stopped drinking coffee because of this, because, I'd wake up in the morning, I'd have my morning coffee, and then my morning coffee would actually cause me to have these emotional responses that made me make bad decisions. So for instance, coffee is one of those things that puts you on a high and makes you feel really good. So it can cause you to think something's better than what it is. Well, I'm just speaking from my own experience. So like, I stopped drinking coffee, and it also changed my decision making. Or I'd wait until I wasn't trading to drink coffee, because if I had it in the morning, I would just make my heart race. and my adrenaline, and if I entered a bigger position, it was just too much. So it's so important to be aware of what emotions are you feeling as a trader. And then you'll see here, okay, so you might have entered here again, either on the TDI, which would have been over here, the TDI X, or you would have entered purely on price action at this demand zone. If you did, this would have been a fantastic trade, even if you got in over here. You see, like, okay, if you had caught it over here, it might have been a little bit more risky, and you would have got 20%. But if you were playing it safer, according to the TDI X, as I discussed over here, then you would have only entered over here, let's just say at this point, and you would have only made 7% as opposed to 20%. But you might have been a little bit safer if you were a new trader and you weren't so advanced. It would be a safer entry for you to trade that way. Then, just like we teach in the Trend X training, this would be the next entry. So you can see this one didn't quite work out, but it's okay. You know, we accept that there's going to be losses, and then we try again over here. But this one did end up working out. So as soon as we get this break, guys, this is the second best place to enter if we're going off the Trend X strategy, is this previous month resistance one break. We call it the breakout, and it works the same, you know, whether it's the daily, the monthly, or the weekly. It's the previous month high break, the previous week, or the previous day high breakout strategy. And you can see price broke out, it came, and it retested. So sometimes it's not the best to enter on the break, but on the retest, because the retest is also going to confirm to us that price is in fact holding this level and that there is stability. So you can see it breaks, it comes down, finds stability, and you can even see we've got rejections. I always look at these wicks. I love wicks, guys. Like, I love looking at wicks because they tell such a story, especially long rejection wicks. You can see, look, this wick is rejecting into this previous month high. And then we get another wick over here, and then suddenly price takes off and shoots up to the resistance number 2. And you can see, look how accurate these levels are. It exactly hits, and we've got this candle exactly hits. We've got a big reversal candle, big wick. We've got 1, 2, 3, 4 wicks that are wicking into this resistance 2. So it's just showing you how accurate these levels are, and we can play them level to level. So if price broke up, came down to this level, our entry could have been at our entry would have been at the bottom of this level over there. I just want to quickly mute everyone.
Yeah.
And there you go. And then the same thing happened again. We got this rejection over here, price dropped down, and look over here, guys, we've got another demand zone. I mean, there could actually be 2 demand zones because this is the first one. This actually would have been a very good demand zone because you can see we've got the indecision candle is super nice there. I love these indecision candles. They've got like a small little body, and then they've got a like not too long a wick on each side, but you can see. Whereas this one, this is what we've got displacement here, but this indecision candle doesn't look as nice to me. Can you see it's got one side that's long, one side that's short. For me, I love these ones. You can see we've got another one over here. In terms of order blocks, I love these ones here, and I talk about it in the training as well. This would have been your primary demand zone over here. And this could have been one. You can see we've got the same scenario happening here because we've got consolidation occurring in this region. And you can see price still did not break below it. If you look at both these levels, the actual candle did not get below these levels. It's wicked in, wicked in, wicked in. So we could have re-entered as well. You know, we got this big displacement, finds resistance, comes down, taps in. It basically did the same thing on repeat. I'll show you like what it did over here. You know, we got this displacement, it shot up, hit resistance, came down, tapped into the demand, then took off. And then the same thing happened again. Off of this previous month high, it took off, hit the resistance, came down, tapped into the demand zone. And look, if we look to the TDX, okay, we don't really have anything on here because obviously price is moved far from the bottom. When price is breaking out the band in this example and it's close to this oversold region, it is showing us it's closer to a bottom. You know, like when we get the dots, these dots are showing potential tops. And when we get dots in the bottom, it's showing potential bottoms. So you can see at this point over here, price was very high up. It wasn't anywhere near the bottom. So this can also show strength. You know, as soon as price, you know, this is the bottom and this is where we can catch the reversal at the furthest point. But as soon as we get these RSIs, as soon as they break across the 50 line, which is over here, this 50 line, then it's entering into more bullish territory. And as soon as it crosses over this middle line over here, it's showing more strength as well. So you can see price basically broke the 50 line, it broke this middle median, and then it got on top, and then it retraced to the bottom and then took off. So at this point where it breaks the 50 and this middle line, that is showing a lot of strength. And you can see what happened at this point. This is when we got this big candle, this big break. And then price came down over here, and you can see it came down, it retraced to this point, didn't go any lower, and the same thing happened in price. At this location, which is such a valid location, at this very strong resistance level, because remember guys, this is a monthly resistance. The monthly resistances are stronger than the weekly resistances. The weekly resistances are stronger than the daily resistances. So the higher we are, the stronger the resistance. That's why if price breaks a monthly resistance, it's going to be very strong. Or if it breaks a weekly resistance, it's going to be much stronger than when it breaks a daily resistance, for instance. And then the same thing happened. It broke that resistance, price took off like this, hit another monthly resistance, number 2, found rejection, came down, tapped into these demand zones. And remember, at the same time, if you look over here, you can see here, this is the new weekly pivot and the daily pivot. So we have a tight daily pivot over here and a weekly pivot. So this is the new week. You can see there's so many different clues here, guys. It's awesome. You can see this weekly pivot is lower than this weekly pivot. So this is an ascending pivot because this pivot is higher than this pivot. So we could have also noticed that when this week opened and we saw this pivot, even though this weekly pivot is a bit wider, and we know that a wide pivot is more of a ranging market, but it's on top of a monthly trending market. So remember, the month supersedes the weekly and the weekly supersedes the daily in terms of the strength. So the month is always going to give us a stronger identification of what's happening in the market over the weekly pivot grid. And the weekly is going to give us a stronger identification over the daily pivot grid. You know, so if you understand how each one works, it's like a little story, you know, it's like the mom, it's like the dad, the mom, and the baby, you know. It's like the one is stronger. And then obviously if price is above the monthly grid, it's long-term bullish. If it's above the weekly, it's mid-term bullish. If it's above the daily pivot, it's short-term bullish. So at this point, you could have even been more confirmed that price is going up because now the week opens up right here. Because also, I talk about this in the other trainings, but it's important to notice where is price in relation to the opening of the pivot grid. And you can see the week opens here and the day opens here, and price is above the grid, which shows very strong bullishness. If price opens up above the pivot grid, no matter which pivot it is, it's going to show that it's extra bullish. If it opens up below the grid, it's going to show it's extra bearish. And in this scenario, when we've got so many pieces to focus on here, we've got, you know, the thin, narrow monthly. So we know it's above here. We know it's bullish. And then all of a sudden here, price opens up above the new weekly and the new daily above it. So at this point, we can almost be very confident, guys, that this is going to be very bullish. And we can look for entries on our trades. You know, like at this point would have been even an entry at these rejections, but then this could have even been a stronger confirmation. Now, price opens up. You see this indecision candle, because indecision candles, guys, they can represent reversals in the market and they can represent continuation in the market. I haven't even gotten into this part of the training, you know, but I'm on indicator X, and I'm gonna cover this in the near future. There's just so much I want you all to understand and get familiarized with before I go deeper. If you look at option 1 on indicator X, it is a purely based on indecision candles. It is an indecision candle. It works on inside bars. So I will go more into this, and I will show you how it'll actually tie in with being able to locate. Okay, we're on a 1 hour. So I want to see if it'll actually. That's not right. So you'll see over here. Can you see how it's located? So this shows you over here. I'm just giving you this as a basic instruction, but I will create a video or live training where I go into more detail about how to use option 1 and option 2 within indicator X, because these are primarily working with indecision candles. And you can see over here, these indecision candles are also showing prime supply and demand zones. But look, if you trade primarily off of indecision candles, they can be a strong sign that there's going to be a movement in the market, a continuation. So you can see this is the reversal. Price comes down. It comes down, and then we get an indecision candle, which is a reversal. Then it goes up, and then we get another one, which is a continuation. And then you'll see price stays above the line, and then we get this explosion, and then we get the same thing happen again. Indecision candle, which is showing continuation or reversal. Then price opens up above, then we get rejection into this inside. I call this an inside bar value line. And then we get this big movement up, and then we get another one, and the same thing happens. It comes down, and it shows reversal. And then price opens up above it, the next candle, and it wicks into it, and then it shoots up. But I will definitely go into more details about that. I just wanted to show you that these indecision candles, it's so good to pay attention to them, especially higher time frame. Remember, right now we're on the 1 hour. So the 1 hour, when we look in indecision candles, we have to observe them on higher time frames. The lower time frame indecision candles are not going to give us solid information. So if we're going to look at indecision candles, it's got to be on a higher time frame, like 1 hour, 4 hour, 8 hour, even a daily. If you see a daily indecision candle, it can only mean two things. Either a reversal is going to happen, or there's going to be a continuation that's going to happen. So it's such an important thing to actually understand. Like if you look over here, we get this indecision candle, and then we get this big drop. And then we get this indecision candle, then we get this big pump, So it's like usually after indecision candles, we get big movements that happen because it's contraction, we refer to contraction as, just before the expansion. And in this case, we get contraction, indecision, expansion, contraction, and then expansion. And then price goes up, hits resistance number 3, and we get rejection. Now let's see, like we're in live price right now. Is price going to get above this level, or is it going to reject this level and become a reversal for us? So you can see it's pretty extended at the moment. It's hit resistance 1, resistance 2, resistance 3. It's hit all our take profits. I'm still in this trade, actually. I'm actually in over here. And I got in right at the bottom here. It's actually such a good trade. I forgot about it. Can you believe it? I just looked, like actually before this, I saw Rats was pumping, and then I looked and I was like, I got in. But my whole point of this whole thing was, guys, these pivots really, they show the future. Like I knew that there was going to be a big movement off of this grid. And the more you back test these narrow pivots, the more you forward test, and we're going to get a lot of experience with them because now we have this automation in the group. So then what we can also do is I wanted to talk a little bit about, and I'm going to talk about the VWAP X in a few moments as well. But I just want to bring on the trend scanner. And I want to show you how we can actually use it in combination with the information. Come on. Okay, I'm just going to refresh my screen. Sometimes it doesn't show.
Seth,
Yes.
quick question before you move on to the next topic.
Yes.
Regarding the contraction box,
Yes.
I looked at my chart. I have the same time frame, the same ticker, but the contraction box is not there where you have it. Do you have, what kind of settings are you using?
Okay, I just spotted. I didn't even use the indicator because I can actually spot it, but I'll show you right now. we can work on the settings. So I'll turn it on. Let me turn all of this off. So you can see over here, it's not showing on this level, but hold on. I'll test it out and see. So let's look at it on a 2. So there you go. So see, it's picking it up on a 2 contraction, but on a 3, it's not picking it up. Or a 4, it's not picking it up. Yeah, so it looks like it's a 2. There you go.
Okay, thanks a lot.
Yeah, no problem. No problem. You see, I've done this so many times that like I can just spot it with my eyes, you know. I can see contraction. So the key to noticing contraction is I always look for the expansion. Like when I see expansion, it shows me. So I don't look for, like when I do it nowadays, I don't look for the actual contraction. Say I'm doing it by my eye, you know. I just see this contraction happening. I mean, it's this whipsaw. You see this up and down. I know that just before this occurred, there was going to be contraction. And then if we turn on the indicator over here, yeah, we can see, yeah. So it was 2-2. And you see there's different swing sizes, you know, that it measures. With these contractions, a lot of people have been asking me questions saying which ones to use. And it's hard to say because if you're on a higher time frame, it will differ from when you're on a lower time frame, and it's measuring the swing sizes. So you can see this swing over here, it's very tiny. So that's why if I had it any bigger, it wasn't going to pick it up. It would be picking up the bigger ones, like that's a bigger swing. And then if I go even higher, it might not even pick up that. Okay, it does. If I go higher, see, it doesn't even pick up that. So now it's picking up bigger contraction swings. So it all depends on the swing sizes that you're looking to monitor. And it's hard to say because like there's no right or best way to do it. It's just the sizes of the contractions that you're looking for. But I like to keep it on 3-3 majority of the time, or you can just play around with it. Like if I had spotted this and there was no contraction, I would have come down to 2, and then I would have seen, oh, there's 2. Especially if you're on a higher time frame, if you're on like a 1 hour, 4 hour, if you've got a higher time frame, you want the contractions to be lower. You want it to be much lower, so it will pick up the smaller swings, because otherwise you can miss out on contractions. And this is something you just have to play around with, you know, because there is no like what's the best setting. Sometimes you have to just come on your chart and check, and then you know you'll familiarize yourself with how it works, and then you'll be able to easily navigate. You know, I normally just open the chart if I use this, and I'll run through a few. I'll check it on a few different ones and see what looks right for the part of the chart that I'm trading. Like, I mean, look how good this looks now. Price comes up, it rejects perfectly into this value line. But if I was in a different setting, I wouldn't have seen that. You see, so sometimes it's nice to like run through like one setting, and I can see, oh, see how that looks. See how that looks, and it's telling a story because each value line is valid. It's just measuring different swings of value.
That's actually why I like the idea of having 2 screens, one for the higher time frame and one for the lower time frame, to have 2 different settings, to not always play around with them.
Yes.
That helps a lot.
Yes, exactly. That's a very good idea. So you would have your other screen open here, and then you would have it on one setting, and then that would be a fixed setting, and then over here you can have it on a lower setting. Because then you get to see, because it tells a different story. Like this story with it now that it's set on it's set on 4-4. It's a very different story from when it was on 2-2. Well, I guess it's the same. We would have just extended this line a little bit further, and you'll see this wick. I mean, yeah, you just have to play around with it. There's no right or wrong. It's just testing it out. But I mean, the thing is that no matter what setting it's on, it's always good to enter your longs underneath the value line. You'll see, like, it doesn't matter what setting you're on, it's still going to show the value line. Entering below the value line for your longs is going to be the best place to enter. But for this example, the 2-2 would have been perfect for this entry over here. I mean, you would have seen, and then this would have been another fantastic entry over here, like under here. if we were using the two together, there's so many different ways to trade with these two indicators, guys. And that's why I like using them together, because if you miss one entry, because like we would have seen here, price would have been dropping, but then we would have noticed that we've got this contraction forming. And we would have seen that this contraction box over here, it's above the monthly pivot and it's above the weekly pivot. So we know this is very bullish. So we could have expected a nice entry somewhere underneath this value line. And then we would have just opened up the TDIX, you would have seen this would have been our great entry right over here. You know, when price comes back into the band, which would have been a little bit higher up, like probably over here. Yeah, we would have entered on this candle over here, because we would have seen. Oh, wait, is it? It would have been that candle over there. So it would have just confirmed to us that we're under the value line. Price loves to go back to these value lines, and then we could have either targeted, you know, if we had entered this place, which would have been a fantastic place to enter. Actually, we would have entered, like, I think our entry would have been somewhere here. Stop loss would have been a big stop loss under there. Would have had a tighter stop loss, and then target one would have been the value line, which was 5%, which would have still been an amazing trade. Or we would have targeted this previous month high point. Or we could have targeted this closest liquidity line over here. See, this is a liquidity line here. So we had three places we could have looked to take profits, you know. Take profit one over here at the value line, take profit two at this previous month high points, or at the liquidity line. And you'll see it hit the liquidity line. It literally bounced off that liquidity line, hit it, found rejection, it came back, then it found supports. It found supports on this previous month high, and that would have been another entry, because you would have found support. This is another good entry for us to have taken. Would have been over here. Stop loss would have been just underneath this previous month high, and we would have targeted either the middle of the range, you know, like the top or the middle, or this liquidity line. So it's like you can use both of them together, either targeting liquidity lines or targeting these resistance points. And then another entry would have been here. You would have seen price would have opened up. Maybe the new week started all of a sudden, and you saw price was above these grids. And then you could have added to your position here. You could have been like, because that would have been such a strong confirmation. Price is above the monthly and the daily now, and it's above this very narrow monthly. You could have added to your position and you could have targeted the liquidity line, just depending, which is still 7%, or we could have targeted the resistance line. So when we use them together, we've got so many different target points that we can take, you know, between these liquidity lines. And okay, usually the liquidity lines are on. I've just turned them off. But sometimes I turn them off and then I just manually draw them in there, because I don't know about you, but like if I see too much going on, I get very confused at the chart. I suppose that would have been fine. So look, if we had looked at it like this, we would have seen here so many different ways to trade this. It's fantastic. So many different entry points, so many different exit points. We know exactly the direction of the market because we can see it's above the weekly, it's above the monthly pivots. We know it's going up, and now it's just finding our best entry points. We can use the TDIX for that precision. We can see over here there was going to be an explosive movement with these Bollinger Bands. You know, it's telling such a nice story. It's just learning how to read that story. And these liquidity lines are fantastic. They really, really are fantastic places to take profit, because price, you know, like 80% of the time, it does respond to these levels. You'll see at this point, price hits the liquidity and we get this big reversal candle, it drops. Same thing happens again, we get reversal candle, drops. And then it just so happens to tie in with our other key levels and our demand zone over here. So oftentimes, guys, you know, these value lines can occur in supply and demand areas. So we can also use them. Like you'll see, this would have been if we just highlighted that box, you know, and dragged it out, it would have been, you know, absolutely perfect demand zone. And you'll notice this a lot. Like over here was the same thing. If we grab this box and we highlight it out, it's a perfect demand zone. Can you see price taps into it and shoots up? So sometimes they coincide. These value lines can be great resistance rejection levels, as well as this barometer of where to enter our trades. They can work double meaning. Okay, so now I want to show you guys a bit about this. I want to first go a little bit into the scanner, the scanner X, which is for PineScript, which is the TradingView version. So basically, the new one that I've built is exactly the same as this. It can just measure more coins, more tokens. You see, we had so many limitations. The reason I built the other one was because of the limitations we got in this one. We can only choose 13 tokens, which is very, very limited, but it's still fine, because what I wanted to show you is that, for instance, if we go, okay, I just want to change. If we go into the Discord group, and then we look here, and we can see all our new narrow ones here. We can take 13 of these, and then we can plug them into the Trendex scanner. And I'll show you here. So say, just imagine I took a whole lot of these, and I won't do them one by one because it'll take a while, but just imagine I took 13 of these out here now, and then I took them into TradingView, and I started inserting them into the scanner over here. And this is something that I see would be a very good practice to do. So every week you've got the weekly ones, every month you've got the monthly ones. You can grab them, and then you can put them in here, and then immediately you can have a look. Like you can see these 13 here, we can see majority of them are green. When they're green, we know it's above the pivot. So it's telling us that these are all in uptrends at the moment. Except AGI, you can see we've got a daily red, a weekly red. So it's showing us that on the daily, it's below the daily pivot, and the weekly is below the weekly pivot. And the same with IMX, it's below the weekly pivot, below the daily pivot. But we can monitor these then, and we can look for good entries, because what we'd want to see, like all of these tokens, look, they're all wide on the monthly now. They're all wide in the monthly, and majority of the weeklies are wide. So these might not be the best tokens to actually trade, but this was my list from last week. And you see from week to week, they actually change. So if I had to plug in the new list, which is the new updated narrows from the bots in the Discord group, if I had to plug them into here, you would see that the weeklies would all say narrow, because I'd be plugging in all of those. And then all I would do every day when the market opens, or I come to my chart, I can just look to see for the ones that have a weekly narrow and have a daily narrow. So maybe tomorrow I come, and then all of a sudden there's more daily narrows, and then those become excellent coins to trade for that day. So it's a very nice way to just monitor your assets. I mean, some guys like to trade lots of different coins, but for new people, I can strongly advise just picking 5 coins or even 2 or 3 coins, and only trade those coins every day on the daily pivots, or put your 13 coins or 10 coins in here and just trade those, especially if those are going to have narrow weeklies, narrow monthlies. And we can find those. We can go into the combo section into the group. We can go into the combo section, and we can grab the combo ones, and then you'll see they'll have a monthly narrow, a weekly narrow, and then all we have to do is wait for the day where we get a daily narrow, and we probably find an amazing trade on that day. So this is kind of the step-by-step practice I was thinking people could do. Just as a suggestion, they could grab them out of the group, plug them in here, and monitor it through here, until the new scanner is ready. The new scanner is going to be exactly the same like this, and it's one of the reasons why I actually built it, because I built this one, and then because of the limitation of only having 13, and it's impossible to get around that in TradingView. It's impossible. So I had to contact my coder, another coder who works actually on another language, Python, and he had to code me completely from scratch. He had to build it up, connecting into the APIs of all the exchanges, and it's going to basically do the same thing as this, except you'll be able to click Bybit, Binance, 5 different exchanges, and it'll just, you won't have to grab the data and then put it in here. It'll immediately be there for you to have access to it. And then it's also got a function, a filter function, so you can filter out only the narrows, only the wides, and it's got a function where you can double click on them and favorite them, and then it will go into a favorited file where you can monitor those ones every day as well. So it's going to save a lot of time. But in the meantime, this is the kind of process I was thinking about that you could use with this one. I like to use this as well. Like I have to actually update it today, but it's really, really helpful in just seeing, because you can see these are all green. Okay, even though we've got so many wides, these could be great trades. Like, okay, let's go look at one of them. Let's look at CFX. CFX over here. So you can see over here, it's currently wide on the monthly and wide on the weekly. So we know that's going to be ranging a bit. And look where it is. It's actually broken above the monthly, the previous month high. So like around this range, if we had to go into a lower time frame, and you can see, look, it is ranging. You see, so whenever the market is ranging, this is the best time to turn on indicator X, because it's like easy to trade a range with indicator X, really easy. And you can see here, if we turn on the TDX, we've got so many great entries here. This would have been an entry over here, because you can see here we've got a little shark fin here. Number one, we've also got, you can see, look at the TDIX, look at the band. It's getting tight over here. Can you see? So we know there's volatility coming in over there. It's underneath the value line. This would have been another entry over here. Okay, this one didn't confirm on the TDIX, but over here would have been another amazing entry. And you can see here, we know that this point here, this line, it's the previous month resistance, previous month high. We know that it can find resistance, so it bounces off this level, and we get a shark fin, and we get these volatility bands. So we know this could have been a fantastic long over here. If we'd entered here, we would have just put, like our stop loss just underneath this resistance. We can target one would have been the value line, and that still would have been 2%. That could have been a great trade. You could have targeted this liquidity line over here. It didn't select it, and that would have been a great one as well. So you could have targeted value line, first liquidity line. It would have been a fantastic trade. Price comes back down underneath. Over here, there wasn't as much confirmation, so that might have been the best one, but this one was a great one as well. To enter, same scenario, below, we know it's ranging because we can see over here, CFX here, look, we've got wide. So when you've got so many wides occurring within the grids, it's going to be ranging. So even though we've got, the bots in the group that's always pumping out the narrows, we don't have to only trade the narrow ones. We can trade the wide ones, because wide ones could also be amazing trades with indicator X. If we've got 3 wides happening, we go to that coin, we still look for range trading. Like we do this exact same process, because you can see here, look, it's green. Because we've got 3 greens here, on the monthly is green, the weekly is green, the daily is green. That is showing us that it's above all 3 pivots. When price is above the monthly, the weekly, and the daily, that is bullish, regardless whether the pivot is wide or narrow. So in this scenario, it's wide, so we know it's range trading, so we can range trade it. If it's all narrow, we know it's trend trading, so we can trend trade it. So it's also understanding more of the sentiment of the market. We know this is bullish, and it's wide, which means ranging. So we know this is a bullish ranging market. Over here, we've got wide. Look at AGI. AGI is underneath the daily red, underneath the weekly, and right now it's yellow, which means it's inside the monthly grid. So at this point, this is pretty bearish. If this goes red, then all of a sudden it's going to be ranging bearish. So then we're looking to enter our short positions above the value line in that scenario. So this is such an excellent tool, guys, just to give you an idea of what's happening. If you've got only 5 tokens you like to trade, this will show you how you will interact with each token, based on the parameters that you use for indicator X, if it's wide, if it's narrow, if it's above the pivots, if it's below the pivots. And I find it super helpful. I'm just showing different ways to use it in case some people are not sure how to use it yet or haven't used it yet. And then I want to show you now a little bit of this cool new indicator that I just finished. The VWAP X. Yeah, guys, guys, I think our group has the best indicators of any other group. I'm sorry, I know I'm a bit biased, but I believe it. Hey, I really do. We got some top indicators. I think we've got everything we need in this group. We've got amazing people. We've got other amazing traders. It's like everything. We have everything in this group to become a successful trader. And I'm super proud to be part of it. So, okay, so I'm going to show you guys how we can use this now. So we can use, I'm going to turn it on just on its own. So I'll show you exactly how it works first. And then I'll show you how we can use it with, in combination with indicator X and trend X. So the blue is the daily VWAP, the red is the week, the red is the monthly, and the yellow is the weekly. It's coded pretty much the same way as it is in the group with the pivots. And then you see we've got these lines over here, these solid lines. Okay, so I'm actually just going to turn off the monthly and the weekly. I'm just going to leave the daily on for now, just to explain it. So in the settings here, we've got the VWAP, which is the previous day's VWAP. And then we've got the daily VWAP. So this white line is basically showing you where the previous day VWAP ended. And these are actually a form of value line. You'll notice these become very strong resistance levels as well, like you'll see over here as an example. At this point here, you can see if price breaks above this previous day VWAP line, because you'll see whenever the market ends, so this was the point where the market closed right over here. I'll mark it for you. The market closed right over here in my country. At that point, that VWAP stops and then it starts printing a straight line. So it's showing you the closing point where the market shifted over. And this becomes a value line, a VWAP value line. And these lines, guys, they serve as very strong resistance lines, and they also become a barometer for price. So if price gets above these lines, it means it's bullish. So, I mean, you can trade with these alone, and they work very well with Trend X. I'm going to show you now. If price is above this previous day VWAP line, the white line, and it's above the actual VWAP, that is a strong sign that it's bullish. So you'll see at this candle over here would have been your entry point, because at this point it's above the previous day VWAP line and it's above the current VWAP. That would have been a very good entry, very nice entry. I mean, how much was there? If we entered on that, that was a nice 6% move. And you'll see the same thing happens over here. So then price breaks up, it breaks below. So now we're only looking for longs, because as long as price stays above this previous VWAP line, we're only looking for longs. But remember, guys, we're on the daily. So this is showing the short-term trend, and I'll show you. It works exactly the same as the pivots. If it's above the VWAP, it's bullish. If it's below it, it's bearish. The daily VWAP is a short-term sentiment. The weekly is mid-term. The monthly is long-term. So you'll see then price comes below. At this point, it breaks above again. This would have been your second entry. So our confidences we're looking for is it must be, number one, above the previous value line, previous day's VWAP value line, and above the current day's VWAP. As soon as that happens, that becomes our entry. You see, this could have been we could have entered over here. This would have been a bit of a fake out, so it's not 100% perfect, but this one would have been a very fantastic entry. And I'll show you how to use it. And then we've got the next day. Look, we've got the same scenario here. Price is above. So like this would have been our entry. At this point, it would have been our entry. And you can see it didn't quite work out in our favor. It came back down and kind of tapped into this level. But then our second entry would have been over here, and it would have worked out really well. So not everyone works out, but this is just showing, guys, a VWAP is a value-weighted average price. So it's actually calculating all the transactions, all the price, and then it's showing you, it's plotting it out in a form of bearish and bullish scenario. So if price gets above here, it's showing the transactions, and you'll see as price moves away from the line, can you see it gets further and further away from the line? It's showing it's getting more and more bullish. and then it comes, it breaks the line, bearish, and then over here, it breaks this value line, and at this point, this could be another entry because it's below the VWAP and it's below the previous day's VWAP line. So this would have been an entry. And then it works the same on all of them. So like if I turn off the daily, so actually I'll turn them on and I want to show you how you use them. So I use them together. I figured out that you can use them together in the exact same way that we use TrendX. So for instance, I want to go back to rats and just show you because we went through rats just now quite thoroughly, and I want to show you how we would have observed it with this tool. Okay, so let's turn on TrendX quickly. You would have seen, I just want to find out exactly the scenario. Okay, here we are. Okay, so this was the point that I've been talking about the whole time, is when price got onto the grid. So now I'm going to turn on. Okay, and I know there's a lot of lines, and usually we could turn some of them off, but I just want to show you this just to give you an explanation. So you can see here, at this point here, we've got, okay, you can see we're above the monthly pivot. So we know price is going up. And then at this point, we're above the monthly VWAP. So, and then it breaks us at the weekly VWAP. So guys, this is such a strong confluence here. We can see at this point, you can see we got a nice, okay, look, obviously here, it breaks above, it breaks below, and it ranges. And this could have been the place where we use indicator X because it's got this little range. But then this point over here,